Getting away from the minnows for once, and I thought I'd look at some of the heavy weights of the stock market in the FTSE 100 and the highest yielding stocks, Royal Dutch Shell, BP and Vodafone. They're all still yielding near to 5%, even though they've come up recently. The first stock here, the first chart, is Royal Dutch Shell, which has recently been in the spotlight over the alleged price fixing, price rigging scandal of the past 10 years. Basically, the message is that if you couldn't work out that the price was being fixed, you probably deserved to pay whatever extra was involved. But anyway, looking at the charting situation, we've just seen a little rebound off the top of March resistance around the 2280 level. We actually bounced off that to 78 today, and the shares have bounced quite well from that zone. But decent end of day close back above March resistance should take the stock higher again. The RSI is only at 59, so plenty of scope for upside here, and the target probably over the next month or so, by the end of June, could be as high as the top of a November rising trend channel at 2450. So a positive situation there, also backed up by the way that the 50 and the 200-day moving averages are moving into a golden cross. So it looks very constructive indeed, despite the fears over price fixing. I move on to fellow alleged price fixer, BP, where the shares have been very constructive recently, with the bear trap last month just below the 200-day moving average at 445, and then a couple of gaps to the upside. The last gap filled today on Friday with a bounce off the 20-day moving average at £4.62. And really, while the floor of that gap holds, we regard the price action at the moment as being a bull flag, and it's also a bull flag above or close to the top of March resistance as well. So a very bullish feature there, and we'll be looking for 490 to £5 over the next month on this situation. Once again, the RSI is only at 61, so plenty of scope there for another leg to the upside. And of course, with both BP and Royal Dutch Shell, these heavyweights should really help the FTSE head much higher than 6,700 where we are now, and 100, 200 points. It wouldn't be very difficult if we saw 20 or 30p on top of BP shares. Finally, what is arguably the best of the bunch, and that's Vodafone, where we've got all the speculation about Verizon and what may happen in terms of a big cash handout to the UK mobile operator. But looking here, we've got the golden buy cross at between the 50 and 200-day moving averages at the start of last month. That was one buy signal. Before that, we had an island bottom formation, a gap through the 200-day moving average as well at 175. Three very, very bullish formations there, and really, with or without the deal, you'd almost expect the stock to move higher, especially as the 200-day line is now just starting to push up as well. Traditionally, the sweet spot in any bull move is just as the 200-day line starts to tick higher. So really, the message at the moment, while we're above £1.89, we could head up to about £2.15, £2.20 over the next month. And of course, there's also the attraction of the near 5% dividend there as well. So great guns going at Vodafone, and it looks like a very positive situation.